Hey everybody, how's it going today? In this video, I want to go over a low price stock that could have a lot of potential upside ahead of it called Nokia, ticker symbol NOK. I'm going to go over why I think they could be getting overlooked by Wall Street, and then I'm going to get into the charts and tell you what I think about them. Now, before I get into it, if you're new to the channel, I like to find short-term and long-term trading and investing opportunities in typically lower-priced stocks. I like to find undervalued, underappreciated stocks with high growth potential and talk about all other things finance-related as well. If that's something that interests you, please consider subscribing so you don't miss any future trading and investing ideas. And remember, I am not a financial advisor, so please do all of your own research before buying any of these stocks. Now, way back in the day, I used to think Nokia was a Japanese company because of their name, but they're actually from Finland. Nokia Corporation is a Finnish multinational telecommunications, information technology, and consumer electronics company. And believe it or not, the company was actually founded all the way back in 1865 when they came out with their first revolutionary new phone called the Red Solo 1. I just kidding. No, but seriously, the company is that old, and the company has operated in various industries over the past 150 years. It was founded as a pulp mill and has long been associated with rubber and cables. But since the 1990s has focused on large-scale telecommunication infrastructures, technology deployment, and licensing. Nokia is a major contributor to the mobile telephone industry, having assisted in the development of the GSM, 3G, and LTE standards, and currently in 5G. Nokia was once the largest worldwide vendor of mobile phones and smartphones. After a partnership with Microsoft and subsequent market struggles, its mobile phone business was bought by Microsoft, creating Microsoft Mobile as its successor in 2014. After the sale, Nokia began to focus more extensively on its telecommunications infrastructure business and on the Internet of Things technologies. Back in 2018, Nokia employed approximately 103,000 people across over 100 countries and did business in more than 130 countries and reported annual revenues of around 23 billion euros. At its peak in the year 2000, during the telecom bubble, Nokia alone accounted for 4% of its country's GDP, 21% of total exports, and 70% of the Helsinki Stock Exchange market capital. Now, since I live in the United States and Nokia is a foreign company, for me they are considered an ADR or an American depository receipt. And ADRs are a form of equity security that was created specifically to simplify foreign investing for American investors. An ADR is issued by an American bank or broker, and it represents one or more shares of the foreign company's stock held by that bank in the home stock market of the foreign company. Now, some brokers do charge extra fees for ADRs, so you should always check with your broker to see if there are any fees associated with the company you are thinking about buying it before you buy it. In 2007, Nokia held a 50% market share in the mobile phone handsets, but that was also the year that Apple introduced the iPhone, starting the modern smartphone era. The following graph shows the growth of Apple's market share compared to that of Nokia's. Once the iPhone picked up traction in the market, Nokia's handset business was doomed. In the first quarter of 2010, Apple sold less than 10 million units and Nokia sold almost triple that. But 2 short years later in 2012, the shift had become apparent, and now Apple's sales more than triple that of Nokia's, and Apple was doing almost 10 times the revenue in smartphones. By 2013, Nokia's handset market share had decreased to less than 5%, with only 40,000 employees reported in 2012. At that time, the company also faced the near certain likelihood of bankruptcy. In 2013, Microsoft bought Nokia's phone business in an ill-fated deal to save the Windows Phone. By 2014, Nokia's revenue had dropped to 6.3 billion euros, and eventually Microsoft restructured its smartphone business and took a write-down of more than $8 billion. Back in the early 1990s, Nokia and Motorola were the top 2 players in cell phone sales. But by 1997, other players such as Ericsson, Panasonic, and Alcatel started to emerge onto the landscape. By 1998, Nokia had taken possession of first place in phone sales, but that year is also when the future juggernaut Samsung burst onto the scene. Nokia had what seemed to be an insurmountable lead in the early 2000s when they were selling more than double its nearest competitor, but by 2010, Nokia fell behind in the smartphone arena, and then Samsung and Apple began to eat their lunch with some exciting new products. By 2012, Samsung had overtaken Nokia at the top spot, and then finally by 2014, Nokia was out of the game. Now, since Nokia has gotten out of phone sales, they have been heavily spending on research and development. And in 2019, Nokia spent 4.41 billion euros or $5.21 billion on R&D. The company's R&D expenditures have recovered after dropping below 2 billion US dollars in 2014, a result from the company selling its device segment to Microsoft and restructuring to focus on network infrastructure. In 2018, Nokia's R&D as a share of its net sales was over 20%. Most of Nokia's spending on R&D goes into 5G technology and network infrastructure. Its competitors in the telecommunication equipment and infrastructure market include Ericsson, Huawei, and ZTE. And as of right now, the United States and China are still embroiled in a tense trade war, with the United States curbing equipment from telecom manufacturer Huawei. Because of this, Nokia quickly became a more suitable candidate for implementing a 5G network in the United States and Europe, which brought up the company's overall market value. Although 5G is only getting rolled out in the market right now, Nokia is already involved in preliminary research on the next mobile generation standard of 6G technology. In June of 2019, Nokia signed a Memorandum of Understanding with Ericsson, Samsung, and SK Telecom to conduct joint 6G R&D projects in the future. The global 5G infrastructure market is expected to witness significant growth over the coming years. 5G technology has the potential to support capabilities such as artificial intelligence, robotic process automation, and the Internet of Things, apart from the high-speed network performance. Thus, with growing internet penetration and rapidly increasing mobile users, healthy growth should be seen in the years to come in the global 5G infrastructure market. 5G is already being deployed, opening up new opportunities for operators, including connecting vehicles, immersive entertainment, and cloud robotics. Nokia's end-to-end portfolio of 5G technologies and services is already being used for projects with operators around the globe. And by 2024, there will be over 1 billion 5G subscribers. Now, Nokia says they are the only vendor to combine deep network domain expertise with solutions throughout the end-to-end service lifecycle, and will help you simplify your operations by leveraging automation and artificial intelligence, and connect your network to your business to deliver the extraordinary. And in any network, the majority of costs come from operations, not infrastructure. And that will be especially true with 5G, given the complexity and number of services to manage. According to 6W Research, global 5G infrastructure market size is projected to grow at a compounded annual growth rate of 54% through 2025. The 4G network became the leading mobile technology in 2018 globally. After the launch of 5G technology in the United States and South Korea last year, several other countries worldwide are predicting to launch the technology by the end of 2020. With the launch of 5G smartphones, which are expected to account for 51% of the total sales by the year 2023, and growing mobile subscribers, the market for 5G services is expected to increase at a significant rate over the coming years. By region, North America accounted for the highest revenue share in the global 5G infrastructure market in 2018. The majority of the revenue in the region were generated by the U.S. on account of early launch of fixed wireless 5G in the country. However, owing the expected commercialization of 5G across countries such as India, China, Japan, Australia, and Asia Pacific, the 5G infrastructure market is expected to witness the highest growth rate during the forecast period. Unprecedented development of the 5G network has brought about a drastic change in the information and technology sector. The adoption of 5G has seen an enormous growth and at a much faster pace. The adoption has been seen with around more than 500 million users globally within a time frame of 1 to 2 years, which the 3G and 4G networks have witnessed in a time span of around 5 to 6 years. The increase in remote healthcare, increased connectivity demand, exploding number of co-location centers across the globe, and an increase in the massive connectivity between people, machines, and technology is triggering the massive adoption of the 5G technology. Now, getting back to the Huawei ban and the opportunity that presents for Nokia, President Donald Trump has extended his executive order banning U.S. companies from working with or buying telecommunications equipment from companies deemed a national security risk until May 2021. Now, while this ban doesn't explicitly call out specific companies, it's been used to virtually shut down U.S. operations with Chinese companies like Huawei, which can no longer sell products in the U.S. or work with companies like Google for critical software and licenses. Now, the White House issued its original executive order almost a year ago, banning U.S. companies from doing business with Huawei due to a national security concern about the Chinese firm supplying equipment for network infrastructure, particularly as the U.S. undergoes its ongoing rollout for 5G. And the United States has been putting pressure on other countries as well, and some have followed suit with the U.S. and will continue to potentially open the door for other players like Nokia and Ericsson. In other news, Nokia has been selected by NASA to build the first ever cellular network on the moon. The article says Nokia, after being named by NASA as a partner to advance tipping point technologies for the moon, will be deploying the first LTE 4G communication systems in space. The network will provide critical communication capabilities for many different data transmission applications, including vital command and control functions, remote control over lunar rovers, real-time navigation and streaming of high-definition video, and these communication applications are all vital to long-term human presence on the lunar surface. It will be integrated into a lunar lander spacecraft that will make moonfall in the year 2022. Nokia's central 4G system will permit lunar rovers, which will arrive later, to communicate with their base camp, and from there will be orbiting spacecraft and Earth itself. Communications will be a crucial component for NASA's Artemis program, which will establish a sustainable presence on the moon by the end of the decade, and this is a $14.1 million NASA contract. In this old news article from January of 2020, it says, Nokia announced it had reached 63 commercial 5G contracts worldwide. The figure includes customers such as AT&T, KDDI, Korea Telecom, LG U+, SK Telecom, SoftBank, Sprint, STC, T-Mobile, Verizon, Vodafone, and more. And the president of their mobile networks at Nokia says, this milestone highlights the quality and customer confidence in our 5G portfolio, and we expect this to continue this year with the addition of many more new deals. We are delighted that our technologies are helping to shape the delivery and deployment of 5G technologies worldwide, and the myriad benefits these will bring to businesses and customers alike. And in a news article from this month, Nokia announced it has signed 17 new 5G commercial deals in Q3. With these wins, the company now has 100 commercial 5G deals with individual customers and a total of 160 commercial 5G engagements, including paid trials. Nokia said that a total of 34 5G networks are already live using the company's products and solution. The vendor added that it has a presence in all 5G early adopter markets, with deals in the top 4 U.S. carriers and the top 3 in both Japan and Korea. The company said that its 5G portfolio is also gaining traction among enterprises. Enterprise customers currently represent 12% of Nokia's 5G deals. Nokia said that it expects further growth in the enterprise segment, adding that it has a portfolio of 180 private wireless customers, many of whom are expected to migrate to 5G. Now, back on October 23rd of 2019, Nokia shares plummeted because Nokia cut its outlook and suspended its dividend. The shares dropped 24% at the open, the biggest drop since 1991. Nokia cut its outlook, claiming that increased spending was necessary to compete with its rivals. In a statement, Nokia CEO Rajeev Suri said, some of the risks that we flagged previously related to the initial phase of 5G are now materializing. We expect that we'll be able to progressively mitigate these issues over the course of the next year. In the meantime, Nokia is suspending its dividend because it is focusing on 5G investments, including developing new products and making equipment less expensive. We do have an issue relating to higher product cost, which is not particularly surprising at this early stage in the new 5G radio cycle. Those costs typically go down significantly as scale increases and cost optimization work proceeds. Nokia still expects significant earnings from 5G networks in the long term, but this will be delayed. The company predicts to see a recovery for its earnings in 2021. Now, in a recent article on Investor Place, it suggested that the reinstatement of Nokia's dividend could be just around the corner. And the article says Nokia stock attracted buyers when it announced big contract wins with several telecom firms globally, but Nokia stopped paying its quarterly dividend in the third quarter of 2019. Their board had decided it wanted to invest the cash in 5G technology. In addition, the board said it was going to wait until net cash reached at least 2 billion euros. And as of the end of the second quarter, net cash topped 1.6 billion euros, and it is likely to reach 2 billion euros by the end of this year. In another recent article on Seeking Alpha, this author is suggesting that Nokia is a great buyout candidate. He says he has a $9 price target on Nokia based on valuation and the growth he sees ahead of them in 5G. And I think a buyout of this company makes a lot of sense for a big company because Nokia has already done most of the R&D and are now getting a lot of contracts, so they are in the beginning stages of reaping the fruits of all of their labor. He also says in the article that Nokia's 5G contract wins are getting bigger and they're barely getting noticed by investors. He says Nokia lost 20% of its value since August of 2020 when Samsung won a 5G supply deal with Verizon. Yet the markets failed to notice that Nokia has continued to win big contracts since then. On September 29th, Nokia signed a deal to supply BT with 5G RAN. In doing so, it also becomes BT's largest equipment provider. And he says the company benefits from customers complying with the national security policy as well. He says the Defense Department awarded several companies with $600 million worth of contracts. It is hiring companies to test their 5G communication technology at 5 of its military sites. Nokia is one of the many companies involved in this 5G strategy, and this plan incorporates 5G technologies in warfighters as well. Nokia's net income, which has been negative for several years, is starting to turn around and head in the right direction. But Nokia was once known for cell phones, and now it has shifted to providing telecommunication networks, equipment, and services, and that's a market that's forecast to grow for years to come. And as a part of its drive into networks technologies, Nokia acquired communication equipment company Alcatel-Lucent in 2016 for 15.6 billion euros. This merger provided Nokia with access to inventive research for technology hardware and equipment so it could compete against industry rivals Huawei and Ericsson. Nokia's business segment, Nokia Networks, which Alcatel-Lucent was integrated into, generated the vast majority of Nokia's revenue in fiscal year 2018. Now, if I bring up Yahoo Finance real quick, we can see that their total revenue has held steady at approximately $23 billion annually the last 4 years. In 2016, their earnings came in at a negative $766 million, and that grew to a loss of $1.49 billion in 2017. But then it shrank to a loss of only $340 million in 2018, and then they eked out a small earnings profit of $7 million in 2019. So all of the investments are paying off, and it looks like things are headed in the right direction. All right, let me catch my breath, and then we can get into the charts here. Right here we have the current daily chart of Nokia. Oh, and as we can see, if I zoom in a little bit, it's actually in what I like to call the pressure cooker. When price gets in between the 200-day simple moving average, which is the yellow line on the chart, and between the 50-period simple moving average, which is the blue line on the chart, in a very tight range, I like to refer to that as the pressure cooker because a lot of the time you can get a nice size breakout when it breaks out of this range one way or the other. You never know which way it's going to break. If I had to guess, it's probably going to break to the upside just because it's starting to form a little bit of a rounded bottom and head to the upside. It has been bumping its head up against the 50-period simple moving average a couple times in the last few days, but it hasn't been able to get above it. But it wouldn't surprise me one bit if it does get above it here in the next few days or so. But what I wanted to show you guys was on the weekly chart, it looks like it is mired in a downtrend channel at the moment. But it looks like it might be breaking to the upside before too long because it's starting to pick up a little bit of strength. But if you put those parallel lines on there, you can see the channel much clearer. Bounced off the lower end of that in the March lows, and then it bounced all the way up to the 200-day simple moving average on the weekly chart just a few weeks ago and reversed immediately, but it found some support at the 50-day simple moving average on the weekly chart, and looks like it's starting to rise up again. And the fact that this is a higher low and it's still heading higher makes me think that it has a pretty good chance of breaking through the upside of this channel. Normally, I would like to wait until it breaks above that channel before I buy, but that is a pretty good size move away. So I'm not quite sure what to do with the Nokia trade at the moment. This trade is very intriguing to me, especially the fact that it has been continuing to trend down ever since 2014. But in the last several years, it looks like the fruits of their labor are starting to pay off, but it is kind of getting ignored by Wall Street. But eventually, once all that revenue starts to come in and they start making outstanding profits, it's going to be obvious to Wall Street, and it will be in an uptrend. But as of the moment, it is still stuck in this downtrend, so I wouldn't call it a buy just yet. I mean, if somebody wanted to take a chance on it just because numbers are improving so much and get in at this lower level, you would be getting in at a lower price, but of course, there is more risk because it hasn't proven that it's gotten into any kind of an uptrend just yet. But if we back this chart out just a little bit farther, we can see exactly how much of a high flyer Nokia actually was back in its peak. Go back to the 90s, we had its monster run from 95 when it was trading at around $4 a share. Now, this is all split adjusted, but when it was trading around $4 a share, and it peaked in the 60s at the top of the internet bubble. We can see the 3 splits that it had. Its last one was a 4-for-1 split in the year 2000. Then it had a 2-for-1 split in the year of 1999, and the year before it split 2-to-1 again. But this stock, I remember being a super high flyer, but fell behind in the cellular phone business, and Apple and Samsung and other players came in and took it away from them. But Nokia is trying to pivot right now, just like Apple did. When Apple was in big trouble before they got into the iPods and iPhones and was able to be a juggernaut. I'm not saying that Nokia is going to be able to do that, but you never know. I don't think they have a Steve Jobs type CEO running the company for them right now, so I would guess that they're probably not going to be able to turn around like that. But right now, they are in the middle of the very, very difficult task of trying to pivot into another big business. But it looks like they are doing a pretty good job so far, and they are going to be very, very interesting to watch. Now, before I get out of here, I did want to talk about a couple things. I did end up selling my position in BCLI. Oh, that's the weekly. Let's go to the daily. I did end up selling earlier today at $10.94, so that was a very nice profit since I ended up buying under $9 a share. So that was a very, very decent profit for me. I just want to let you guys know that I did end up closing that position because it's 8-period exponential moving average is coming down fast. And when they do tend to touch price, it tends to reverse pretty hard. So that might happen pretty fast. And this is a good enough profit for me. No need to try to squeeze every little last penny out of it. But let me check the NASDAQ real quick before I get out of here. I had put in my previous video that I did on Friday about how it looked like it was going to start trending higher, and I actually didn't look at the market hardly at all yesterday. I was gone for most of the day, so I was a little surprised when I came back and everything had reversed so hard. But it looked like the Qs were starting to make a little bit of a rounding bottom, head higher, but because the market had fell off so hard yesterday, it dragged just about everything down with it. Man, my computer is slow. I apologize for that. It's like freezing on me for some reason. If I didn't live in Siberia, I had a decent internet connection. Come on. Oh my God. That's frustrating. Anyway, came down to the bottom of that channel, but we are still in that channel. It looks like it is starting to make another run at the top end of that channel, so we'll see if it can bounce above it. It looks like it's probably going to. It is holding above the 8-period exponential moving average on the hourly chart, and if it can blast through that, that would be definitely great for the market. Oh, and there is one more thing that I wanted to show you. One of the gold stocks that I've been following, I haven't taken a position in it just yet, but I am considering it. Because if the market does roll over, gold, of course, is a hedge. Let me go back to the daily chart. I put this in a previous video, and I was hoping to buy some if it got closer to $1. It never did. But gold is a hedge against the market. When the market goes down, gold tends to do well. And this is a very nice-looking gold penny stock. And as we can see, if I zoom in a little closer here, it is forming a nice rounding bottom. It's finding support at the 8-period exponential moving average, and it's starting to slingshot higher. But if you didn't see my previous video where I had this in there, this has the perfect setup that I like to see in penny stocks as they go sideways. They have a nice long sideways consolidation for several years. And THM, International Tower Hill Mines, definitely has done that. This is, man, this computer is really starting to frustrate me. Apologize for that, but it has had a nice long consolidation, and it is in the markup phase right now. I might get into this one before the end of the day at the once I get done with this video, because that is a beautiful, beautiful pattern that it's forming. And if the market does trail off, which it definitely could, I mean, historically the market usually goes sideways to down in the months or two after an election. So in the first 1 to 3 months after election, the market does tend to go sideways to down. And I did put that in a previous video in case you want to go back and check that out. I went back through the last 6 months, or the 6 months after the last maybe 10 elections. I showed close-ups of those charts, and as you can see from that video, they trended down in most of those videos. But I just wanted to show you THM before I got out of here, because I am strongly considering adding that one today before the market closes, and I'll probably put a stop on it, maybe under this 200-day simple moving average that's rising into it, because if the stock market does start taking off to the upside, this one will probably get weak, I would guess. I mean, it's hard to say, but this is a very nice looking pattern nonetheless. But all right, guys, I am going to end the video right there. Thank you so much for watching my video all the way to the end. If you have any comments on Nokia or any of these other charts, please leave that in the comments section for me, and I will get back to you. Please like this video if you enjoyed it. It took me a long time to make. And subscribe to my channel if you haven't already, so you don't miss any future trading and investing ideas. And but there you have it. Thanks for watching my video all the way to the end, and until next time, take care, everybody.